Ladies and gentlemen, good day and welcome to the Q3 FY23 earnings conference call of Mech Projects, hosted by Nirmal Bang Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prasheel Gandhi from Nirmal Bang Institutional Equities. Thank you, and over to you, sir.
Thanks, Tanvi, and good afternoon, everyone. Nirmal Bang Institutional Equities welcomes you all to 3Q FY23 earnings conference call from Mech Projects. On the onset of call, I would like to thank the management team for giving us the opportunity to host the call. Today, from the management team, we have Mr. S.K. Ramaiah, Director, Business Development, and Mr. Jamie Satish, CFO. I would now like to hand over the call to management for opening remarks, post which we can take questions from the participants. Thank you, and over to you, sir.
Thank you. Good afternoon, friends. This is Satish here, and I have with me Mr. S.K. Ramaiah, Director, Business Development. I welcome you all to the earnings call quarter 3 and 9 months FY22 and 23. The performance for quarter 3 and 9 months for this financial year continued as per set targets for the entire year. The reported total income for quarter 3 is around rupees 912 crores. Again, this is all-time high in terms of execution for Mech in its journey during quarter 3 of any financial year. The EBITDA is around rupees 106 crores and PAT is 51 crores. During quarter 3 of previous financial year, the reported total income was 650 crores. EBITDA was rupees 72 crores and PAT was 33 crores. On a year-on-year basis, total income has shown a growth of almost 40%. With the growth of revenue, the growth in EBITDA is around 47% and growth in PAT is almost 54%. The revenue mix for quarter 3 is as follows. Erection business contributed almost 144 crores. Civil business, including railway, water projects, it's around 492 crores. Operation and maintenance, both domestic and international put together, is 260 crores. Electrical business, it's around 12 crores, and other income close to 3 crores. During quarter 3 of last financial year, the same numbers were like erection business contributed 127 crores. Civil business around 268 crores. Operation and maintenance 226 crores. Electrical business 25 crores, and other income it was around 4 crores. During quarter 3 of FY23, domestic business has contributed almost like 89%, and the balance 11% has come from the international market. Similarly, power sector has contributed 55% and non-power sector it's almost like 45%. That is the mix for quarter 3 FY23. We have seen growth across all the segment except electrical business. In electrical business, the company is very much selective in its approach and not intending to expand its space in electrical business. O&M business has grown by almost 15% and it has contributed 29% of the total revenue for this quarter. Similarly, the total reported income for 9 months FY23 stands at 2,435 crores, and for 9 months the EBITDA is close to 281 crores and PAT is 134 crores. Whereas during 9 months of last financial year, the reported total income was 1,822 crores, EBITDA was 206 crores, PAT was 91 crores. On a year-on-year basis, for the 9 months, we have seen a growth of almost 34% in revenue, and with the growth of revenue, the growth in EBITDA is almost 36%, 47%. And the revenue for 9 months is as follows. Erection business contributed 458 crores. Civil business, including railway and water projects, it's around 1,235 crores. Operation and maintenance, 682 crores. Electrical business, 52 crores, and other income, it's around 8 crores. Whereas during 9 months of last financial year, erection business has contributed 370 crores. Civil business, it's around 775 crores. Operation and maintenance, 587 crores. Electrical business, it was around 76 crores, and other income, it was around 15 crores. And the mix between international and domestic, the domestic business has contributed 86% during 9 months, FY23, and the rest has come from overseas business, it's around 14%. And the mix between power and non-power business stands at 59% and 41% during 9 months of this financial year. The company always been conservative in its approach since its inception, and therefore while building its business plan, takes all suitable steps to retain the plan under control. In addition to the plan for sustained growth, the company's focus will also continue on cash flow and margin improvement. We are seeing the margin profile improving gradually. Maybe by FY25, we're expecting to reach to our earlier reported margin profile and move thereafter with some gradual improvement. This is mainly on account of various initiatives what we have taken since past few years. Moreover, we are very happy to see our execution cycle improving each quarter on quarter. The company has set strong base in terms of resources, equipment, strong manpower base, leadership skill, both at senior level and middle and junior level, engineering skills, etc., to execute projects in the range of rupees 400 crores to 450 crores per month, which is encouraging. If you see, like a few years back, our execution range used to be around 400 to 450 crores plus in a quarter. Now the same level of execution is going to be done in a month. This shows the transformation of the company that has been done for sustained growth. All the existing projects are on track and moving as per the schedule. The execution plan for the year and for the next financial year remains on track, and we do not see or anticipate any changes in our business plan. Similarly, seeing the present opportunity side, the order book target for the current and next financial year looks to be comfortable. Each month, the business development team review is done based upon changes to see that the overall target of the company is intact. The company is also expecting good amount of order booking and execution cycle at international market. The team is strengthened even at international market. Especially, we are expecting good amount of additions in the operation and maintenance in the Nigeria market. Moreover, the company has set a strong risk management policy and team to review each project progress and identify associated risks. This is helping us to proactively mitigate at early stage for any associated risk, if any. The initiative which the company has taken few years back is helping now for a sustainable growth across verticals. Coming to the next line items, depreciation as a percentage remained on lower side, as we have seen, even stated in the last call, that because of controlled capex, this line item is kept more or less flat. Similarly, finance cost as an absolute number remained controlled. There has been some increase in the non-fund utilization because of the order book increase and execution cycle improvement. Now, this as a percentage, we are expecting it to come down further. The overall working capital cycle seen improving for the period due to change in the customer as well as the business mix. The net current debt, excluding cash and cash equivalent, it's ranging in the range of 145 to 146 days during the period, and as stated earlier, this is expected to improve further. As you all know, this used to be 53 days 31st March 2022 and 205 days 31st March 2021. So there has been significant improvement in the working capital cycle. Moreover, the operating cash flow we have seen is positive. It's around 45 crores plus during the period. And more importantly, we are seeing that the average monthly collection improving each month, which used to be 250 to 300 crores. Now it has gone almost like 300 to 350 crores plus. And we are expecting this to go up again to 400 to 450 crores per month with the growth of the business. And coming to the debt line item, the gross debt, it stands around 535 crores and the net debt is almost like 336 crores. Whereas FY22 it was 527 crores and the net debt was 320 crores. So in spite of growth in business, execution cycle and all, this number we have kept flat, and this we are working to bring it down. So this shows the improvement in the working capital and the cash flow. Coming to the order book, the backlog as of 31st December 2022, it stands around 24,200 crores. And the plan we have set close to 10,000 crores for this year. We are trying to move towards that line item. We have done so far 8,500 crores. Apart from that, we have projects which are L1 close to 970 crores. So we are comfortable to reach to the closer number, the target what you have set for this year. Now I request Mr. S.K. Ramaya to share a few more developments before we get into question and answer session. Thank you.
Yeah, Ramaya here. Good afternoon to everybody. Thanks, Satish, for your update on the various numbers. I think we continue to be bullish on our approach in the new opportunities and the various development activities and marketing from variety of customer base and the investments which are taking place in all the sectors of the economy. Basically, there is a substantial growth in the order backlog compared to March 2022 and 8,854 crores. Now it has reached almost 50,000 crores, as Satish has told. That is almost more than 90% growth in the order backlog. That has been propelled by substantial opportunities in FGD business, in various infrastructure projects, and then other key opportunities. And for the quarter under 3, the total order booking has been 1531 crores compared to 1628 crores compared to last quarter. And of course, in the second quarter, there was bulk orders on FGD particularly. And our expectation is that that in the balance thing now 8,500 crores is there, 9.5 to 10,000 crores should be a reasonable possibility at the end of the year. That should help us to build up a backlog of nearly 15,000 crores by end of the year, which stands as on today also near that figure. Now the key segments, as already told, that mechanical, the backlog has gone up from 1650 crores to 8,260 crores. Civil, it was 5,842 crores to 5,663 crores. This is from March 22 to as on December 22. Then O&M 1240 crores to 850 crores, and the electrical 118 crores to 130 crores. And then the domestic, there is a substantial growth because of the more of the opportunities, and we have obviously we are focusing on the domestic market because of all these market available. And then the power sector continues to give a fillip to the order backlog based on the FGD opportunities and a few of the other installation opportunities coming up. That comes to 9,638 crores versus non-power of 5,268 crores. Apart from the MDO, this is a backlog. Now coming to the key orders bagged, apart from what we have bagged in the first 2 quarters, is BMRC Chelagatla Bangalore Workshop Depot, around 427 crores, and then one wagon repair shop, railways 250 crores, and then other FGD jobs are there. And then the L1 status is there about 970 crores. Therefore, with these opportunities, obviously, what we are targeting for nearly 9,500 to 10,000 crores would be a possibility. And then next, coming to the next year, 2013-14, we are already mapping some of the opportunities, and as we have seen, the investment in the current budget of infrastructure and capital investment of 10 lakh crores, and the major investment is coming in the railways, about 2.4 crores, and then roads 2.7 crores, and then in energy sector and other miscellaneous various other areas also. And therefore, we are in line with these opportunities brought up by the government investments, and then particularly in drinking water schemes, then energy sector, oil and gas sector, mining and minerals, apart from the roads. Therefore, these opportunities will be continued to be aggressively pursued by us, and our estimation is that we can target nearly opportunity-wise over 30 to 35,000 crores. And then international also, because of our domestic bullish market, we were not focusing much in the last 1 or 2 years. But Middle East, it will be opening up in the Middle East market, plus 300 gigawatts of opportunities. Now, and then West Africa is there. Nigeria, we are already working there, and we are also undertaking a O&M job for the Dangote job, which is just now completed, and then other countries in the Western Africa. And then domestic, obviously, there is going to be continued scope potential for the FGD about 80,000 megawatts. Then some of the new plants are also expected to come in Neyveli Lignite Corporation in Orissa, about 2,400 megawatt. Then NTPC is to add additional capacity in Singrauli, Lara, and other projects also. Therefore, there is going to be some additional opportunities which is expected in the thermal sector also, and then infrastructure, particularly mining, minerals, and then coal mining, and then material handling. Railways. Railways is going to be a substantial opportunity. In fact, already we are doing about 6-7 projects, and there are a lot of opportunities in maintenance shop, repair shops, and then this metro projects. Metro projects, this one we have made in Bangalore for the Chelagatla project. Similar projects we can take up for the new metro projects, because wherever metro projects are coming, there are maintenance shops are required, and that is a focus on the new opportunities. Therefore, all these things combined together, it is not a challenge to target opportunities to 30 to 40,000 crores, and with a hit rate of 20 to 30%, 25 to 30%, I think our next year targets about 7,500 to 8,500 crores. That should be a reality. And this growth story should be continued to be maintained in the coming 2 to 3 years. Apart from the new opportunities will come up, and one more thing what I can say is that there is going to be huge investment which will come up in the private sector, particularly in the minerals and metals, steel, etc. The total investments like ArcelorMittal is going to make major expansion. Then JSPL is coming with expansion, JSW is coming with expansion. Apart from that, minerals and coal mining, a lot of expansions are expected, and these opportunities will throw up both for EPC jobs, then erection testing commissioning jobs, and many of the other civil works, etc. For that also, if we factor it, these opportunities will further go up. That is what I would like to say, and then we can now wait for your questions. Thanks.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Hi. Good afternoon, sir, and congratulations on a very good set of numbers. My first question is on the revenue guidance for FY23. I think we had given a guidance 36 billion. Are you maintaining that number, and how do you see FY24 on this base?
Yeah. See, FY23, we are on track. Normally, like if you take 9 months, first half and second half, the second half which is significantly high compared to first half. Okay. So the targets and execution cycle more or less on control. So we are confident that number will continue. 24 even like we have kept. Water will play a significant role, and of course O&M will continue to be around 1,150 to 1,200 crores. And water business, because the order backlog what we have taken is close to 2,800 to 3,000 crores, and the calculation is per village it's working around 1 crore. Now post detailed project report DPR, okay, the value is going up almost like 20 to 25%. So now the order book, we have taken the original contract value. Once the few villages it's been revised, and almost like 20-25% had to revise. Okay, so maybe FY23 31st during quarter full we'll revise the complete number. So this will throw a huge backlog for us to even in terms of execution. The water itself now on an average it's working almost like January post to December, January it's almost like 120 to 150 crores. So this cycle is expected to improve to 150 to 160 crores. So maybe 1,500 crores. So execution cycle we can expect next year. So they seeing the order backlog now. Okay, on average 42 to 43% is quite comfortable to take it next year.
So you're talking about number of 43 billion. Is that number? Is the number talking?
No, conversion is 40% plus, 42% plus conversion to the opening order book. Okay, it's quite comfortable. On top of that, the temporary shutdowns and any new orders comes the next year, that will also add to the kitty. So if all goes well, the way it looks like FY24 we should cross almost like 5,500 crores plus.
I understood. Secondly, sir, have you started executing Adani FGD project, and have you started contributing, or do you think it will take some time to take off?
I think we have had a thorough review on all these projects of Adani, 15 plants of 8,460 megawatts, and reasonably, the first is the ordering status is track. Around 1,100 crores have been ordered. Another 100 crores is expected by end of March. And next year by second quarter and maybe beginning of the third quarter, most of the ordering should be completed except for the last segment, electrical C&I. For that should give a good track in terms of execution of this, because there are commitments of this one. All these projects are committed projects, and with the local regulator in place to sanction approve these projects for the PPA and other things. Therefore, we are on track on all these projects as on today.
So lastly, sir, on the Talabira, Singrauli, Lara, what are the kind of opportunities we can cater to, And are you seeing the tenders from the companies for where we will be, eligible?
Yeah, you mean to say for the power plants?
Yes.
Yeah, see, Talabira, that 3 to 800 megawatt, NLC has already intimated bids, BHL and L&T are there, and they are yet to take a decision. Maybe by end of this year, perhaps they will take a decision. That will be opportunity will be there. And of course, NTPC, I told they are inviting bids for the LARA project also, 2 into 800 megawatt, then Singareni also. That is an additional opportunity. Therefore, all these projects will come up possibly for the next year in terms of the power sector business. And then I told you about the FGD business. And then FGD, substantially what we are doing is that now Udumgadi we have already provided an offer, and then JSPL is coming with a FGD conversion for all their plants around Tamnar and then in Orissa, that is in Chhattisgarh and Orissa. That will be substantial opportunities in terms of roughly around 4,000 megawatts. And we have got a good relationship with JSPL, Nangul, Tamnar and various other projects, Raigad. And that should throw up opportunities at least about 2,500 to 3,000 crores. Apart from the other government tenders and utility tenders which are expected to be completed.
Understood, sir. Best of luck, sir. Thank you and best of luck, sir. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask any questions, please enter star and 1. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. Now, my first question is on the status of MDO project. So, is it online? Is it on stream? Like earlier, you were guiding that by Q4 FY24 it should start generating revenue.
Yes, sir. Yes, I missed to update one good development. See, for starting this MDO project, the critical milestone is stage 1 forest clearance, and we have got it, sir. So it's in terms of approvals now in place. Next 2 months, the environmental clearance will follow because stage 1 FC is important for environmental clearance. So by June, we'll start ground activity. So this project is completely under control and is as per the plan. So we had planned close to 50 crores plus FY24, and that is in control, sir. It's possible. Okay. There may be a slight improvement because of the escalation. We have taken the price as we quoted. So probably maybe second half or quarter 3 of next year, we'll review the numbers and will come up with the revision numbers, sir. So the number is going to 50 crores plus.
Okay, thanks. Now my second question is just to understand. So whenever we execute any particular work, after completion of the work at every month, we must be generating the invoice to the client. Let's say if some clients don't pay, then till what level we work or we stop the work?
So normally, see, being a cash contractor, it's all cash contracts. The payment cycle is normally 30 to 60 days, but as a practice, it's going almost 70, 75 days. So existing customers, wherever we understand, we go up to 60, 65, 70 days also. But new customers, we don't work beyond 40, 45 days. So we see that the payment is well protected. Otherwise, we'll end up incurring additional cost.
Okay. Okay.
Yeah.
But have in the past have we done like let's say if some payment is not coming beyond 70 days also, we stop the work typically?
Sir, this case been in multiple instances. We have to build that pressure. Okay, because our like 50-55% in projects, even 65% is manpower. Okay, so we have to build that pressure that the payments, my payments are linked to our collection. So we have done across in multiple cases.
Okay. Okay. And my last question is on this Adani FGD order. So earlier you have mentioned that we are going to receive the advance and we will not require to deploy our own funds in this project. Is it right?
Even today the stance remains the same, sir. The plan is to have a cash neutral project. So we will not invest anything in terms of working capital except the equipments of 25 to 30 crores, which we have already done that. So we have taken almost 100 crores of advances for this project. We have already availed this. And we're expecting last 2 days we got some amount, and maybe next 1 week we'll be getting another 25 to 30 crores. So need based we're drawing because interest free, and our progress is again aligned to the receipts. So it's on track, sir. Yes, you're right. It is going to be a cash neutral project.
Okay. That's it from. And just one last question. So in terms of margins, across the segments, we generally have a similar margins, or it varies, like erection, civil work, O&M?
The margin profile changes, sir. Actually, O&M, that's where we command more. Okay, that's where we command more. And compared to domestic and international is slightly higher side. Okay. And mechanically it works around 11.5 to 12.5%. Civil is working now 9 to 10.5%. The reason being, we have spent in terms of royalty to build the credential since 4 to 5 years now, and we are getting that fruit now. So what will happen is the projects which we have quoted paying the royalty now, that's getting over. Maybe next few quarters we'll see that margin profile improving. So we are targeting that FY25. At least we should reach to our normal reported higher margins, which used to be 13% plus. So that's where we are working towards.
Okay, fine. That's it from my side.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, hello sir. I joined the call a bit late. Maybe it could be a repetitive question. I'm sorry for that. I just wanted to check what update did we give on the 6,000 crore of the order which has come from Adani Power on the FGD side, in terms of execution, in terms of the timeline, and will it by any chance change the initial expectation of revenue that we had for the 24 and 25? Which I think the last quarter we mentioned that we'll do about 3,800 to 4,000 crore revenue this year and about 5.5 next year. So does it change anything? Does it change in terms of the order inflow, advances? If you could comment on that, sir. And I'm sorry if this question was answered earlier.
Yeah.
As Satish has, I think, told recently, the advances are on track, 100 crores, and another 50 crores are also on the pipeline. As far as the conversion is concerned, these projects are expected to be completed by 25 of the projects. Therefore, the most important for all these project execution is the ordering cycle. Now, ordering cycle will be completed in the next 6 to 9 months. Therefore, the conversion should be on track. This year we may get about 50 to 100 crores of turnover. The coming year about 1,500 minimum we are expecting it, and balance will be completed in the next 12 to 18 months. Therefore, these projects are fully committed, and we are keenly following it up on all the aspects of that execution. And then major works will be on the civil, mechanical supplies, structural and equipment supply. And as I told you, 1,100 crores ordering has already been done, and the balance ordering will be completed by second to third quarter. And that should pave the way for a reasonable timely execution, barring the local issues, whatever is there, that is access availability, customer acceptance of certain things, all those things, the normal project issues can be there. Otherwise, we are very confident on continue tracking this project in reasonably.
Yeah, and sir, this 3,500, 3,600 crores, it's more or less in control because quarter 9 months, so we have seen the execution cycle improving and it's going as per our plan. So this year, the guided numbers remains under control, and next year even 5,500 crores plus, okay, and any improvement in the editions of next year, that may add up some more, but we'll come with that numbers maybe first quarter of next year. As of now, the number what we have given, that remains that.
So you have got 1,100 crores of order already issued on that 6,000 crore of order backlog that you have from Adani. That's how you were mentioning, right? I think 1,100 crore work order has been issued.
Yeah.
And what is your revenue assumption from that order for next year, that is 24, in your total 5,500 crore revenue that you are thinking?
Our assessment is that around 1,500 crores.
It will range to
You will execute.
crores.
Okay. And sir, this being a more regulatory nature order, so it was a compulsion to put up these FCDs. Is there a timeline issued for implementation of it by any regulatory authorities or anything?
I will tell you that. You see, the entire FGD retrofitting is guided by the CA, Central Electricity Authority norms, between 24 to 26. That is the three categories of plants are there: Class A, Class B, and Class C. And most of these plants come under Class C. Therefore, 25 and 26. Therefore, there is a reasonable time available to implement this project to meet the regulatory deadlines fixed by the government. And accordingly, the ordering is being done, and that is how the EPC order also has been placed by Adani and us.
Okay. So in any situation, can this be cancelled or postponed, or it is a compulsion to implement?
No, it is part of the, one is a part of the national commitment. And second thing, all these FGD implementation, 1,69,000 megawatts is the total plants identified out of something like 210,000 megawatts, 210,000 megawatts. This is part of the mandatory incorporation committed to the COP 2026, whatever was the international commitments are there. And it is very important for this country to meet the sulfur dioxide emission control, and there is no going back on this. And in fact, order flow is expected. In fact, a lot of inquiries are coming. Already more than 55% ordering has been done. Another 40-45% has to be done. Perhaps in the next 1 year, all this ordering should be completed.
And sir, what is the progress on the balance 80,000 megawatt of projects where the FGD order is yet to be placed, and we are hoping for some order wins there?
Yeah. We are targeting nearly around 7,000 to 8,000 megawatts in that. I told JSPL is there, Vedanta Group is there. We are our favorite customers, and then private, public sector utilities also in Tamil Nadu we are targeting. Already we have submitted the offer, and other selected places wherever we are there, we can do that. Our plan is to at least see the opportunities for about 7,000 to 8,000 megawatts in this.
Okay, and my last question is, sir, our MDO order execution will start in 25, right? That's how it is, or is it in FY24?
See, MDO, sir, just before your question, we had that update. So MDO, we have cracked the first milestone, which is important to start the project. That's the forest clearance stage 1. Now that stage 1 clearance comes, then stage 2 and environmental will follow in 2 months. So we have got that approval, sir. Now the approval part is in control. So the execution ground will start June onwards. So the 40 to 50 crores, or maybe slightly, this number may go up because of the escalation, and what we have projected is as per that timeline, sir.
So the execution of some business will be there in 25, right? 24, sorry, 24.
24, we are expecting close to 50 crores and may slightly go up because of the escalation figure.
Okay.
And thereafter,
and last year,
ramping up.
And on the margin side, do we expect any expansion in margin next year?
Sir, there is a gradual improvement because the last 4 or 5 years we were losing in terms of royalty. Okay, in spite of our core business doing good amount of execution margin, there is high probability that it will go up. But we are confident that now, because of all these new initiatives, 25 at least will try to reach to our normal margins. That's the plan.
This is that 2.5% of order that you have to pay for.
That cycle is coming down. Okay, now slowly the margin profile is improving. So we are seeing that by 25 we should go back to our normal reported margins of 13% at least.
Okay, thank you very much, sir. Thank you.
The next question is from the line of Jay Sinha from Jay Tours and Travels. Please go ahead.
Hello. Hello, good afternoon.
Yes, sir.
This is a repetitive question, I think. This is regarding the Adani order only. Because of the Adani things order, I think our share got beating. Now, how regarding the payment of Adani Adani orders of 6,000 crores, how safely placed we are regarding the payments and the execution?
Sir, as we said, okay, even we had the similar questions, okay. As we said, see, this is a cash neutral project. We have more or less advance. We will draw and utilize need base. So we have drawn 100 crores plus. We'll be drawing some more amount. And almost 1100 to 1200 crores order been done. Now it's a global mandate, and for them also there's a time pressure. So in terms of execution, it's on track. We are planning maybe 50 to 100 crores of turnover this year. Maybe next year we have planned 1200 to 1500 crores. And this number may further go up because of time pressure, but that will come in maybe quarter 1 or quarter 2 of next year based upon the progress. It's more or less absolute under control, sir. There is no slowdown.
And to add to what Satish said, whatever projects we are doing with Adani so far, we have a reality check on that, the road project, and then the 2 infra projects, the mining projects, what we are doing in Orissa, and the O&M jobs are also. And nowhere our bills are pending for more than a month, 30 days to 40 days.
Sir, 16 years of journey, sir. We understand the customer. So my maximum payment cycle is 30 days, okay. So if you see today, as of today, no dues actual pending. And this being a large contract, as a risk mitigation, we've ensured that it has to be a cash neutral project, except for capex of equipments of 25-30 crores. Of course, those are in-house equipments. Apart from that, there will not be any working capital investment from outside. It's on track, sir.
In fact, we had a review with the Adani teams, and we are getting confidence about as far as these investments are concerned, because they are very specific for meeting the regulatory requirements, and they are already committed on these projects. And then there are PPS also in place. The 600 crores orders from all the PPS are in place. Most of them.
Yeah.
So according to my understanding, this after completion of this project, maximum payment cycle will be 30 to 45 days.
Pardon?
No, this project, yes, sir. These all are 30, 45 days, sir. Maximum beyond that, we cannot afford to wait.
In the case of Adani FGD job, our commitment for investment is working capital based on what we receive from them.
That's how we have structured.
That's how we have structured the entire contract. Our vendors will pay only once we get from them.
Yeah.
Okay, so once they pay you the advance, then only you will execute the order.
Today I have surplus, sir. I've taken almost like more than 100 crores plus. Okay, what I've released is hardly 60, 65 crores. I have surplus cash.
Okay.
Yeah. Can we move to next question, sir?
Yeah. Thank you very much.
Thank you. Ladies and gentlemen, to ask a question, please enter star and 1. The next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
So this one question, the mining MDO revenue for FY24, you said 50 crore or 250 crore?
50, sir, 50.
50. Okay, and in FY25, this number should ramp up to what level?
MDO, it's this 25, let's take this base number, so without escalation, it will be in the range of 155 to 175.
Okay, and escalation is approximately 40%?
Sorry, can you repeat again?
Escalation versus the base prices is approximately 40% on current cost?
Yeah, today see the quoted price is 886. As per today's escalation, it's working almost like 1450 rupees. Yes, as you rightly pointed, it is slightly higher side because diesel been given in the price escalation index more weightage. Because of that, this price has significantly gone up. So the cost is not proportionate. So the margin profile should also improve.
Okay. And in terms of when you consolidate it in your balance sheet, what sort of capex should we build in for FY23 and 24?
FY23, sir, maybe max of 15 crores because not much investment will happen. FY24, see, we have planned equity infusion of close to 100 crores plus. So 75% will come from our book. So maybe 150, 160 crores, both the equipment put together, equity and plus the term loan and all. So it may range 150 to 180 crores. And the rest FY25, 23.
Okay, so 150 basically includes 75 crore of equity and balance of capex.
Yeah, the 75 will infuse 24, maybe 30 to 40 crores and 25 the rest.
Okay, understand. Yeah. That's all from my side. Thank you.
Yeah, thank you, sir.
Thank you. The next question is from the line of Nikhil Abhyankar from DAM Capital. Please go ahead.
So I just have a bookkeeping question. So can you just...
We've lost the connection for Nikhil. We'll move to the next question from the line of Riken Gopani from Capri Global. Please go ahead.
Hi, sir. Am I audible?
Yeah, please, sir.
Yeah, thank you for the opportunity, sir. I have 3 questions. The first one on the order book. So you've mentioned for next year that you might bid for about 35,000 crores of orders in the domestic market, and at the 30%, that could give you about 8 to 9,000 crores of orders here. But you're also saying that you would, increase the focus on the international markets next year as well. So overall, what kind of order inflow do you expect in international, and in aggregate, what kind of accretion do you see to the order book for now?
The plan, what we have kept 7,500 to 8,500 crores. Okay, that includes close to 700 crores of international order book. That is the target. So that will be a combination of maybe 50% O&M and 50% will be the mechanical space.
Actually, our opportunity in domestic is substantial. Now, whatever we get better opportunities there we'll target in international, because in India there's a lot of domestic opportunities are available. If you have seen last year also the same thing.
Got it. So 7,500 crores is roughly what you're expecting as the domestic inflow. And in that, are you bidding in any FGD orders as well, or this is outside of that?
Now, FGD total opportunities, we may be bidding for about 5,000 crores. Maybe we'll expect about 30% in that.
Got it. Okay. Got it. The next question is with regards to the cash flow, that you've been able to improve the overall working capital cycle, as you mentioned, compared to last year as well. So what is driving this improvement, and in terms of next year, what's the direction that you would want to guide?
Sir, it's very, very simple. Like if you see, we have been working for 20 years with BHEL. Okay. The experience with BHEL used to be slightly different 5 years back, but now since 5 years we are seeing the receivable cycle going up to 80 to 95 days. Okay, and so that was one of the reasons. And some of the projects BHEL, when the project is about to complete the final build certification, they are taking slightly longer time. Now, since 4-5 years, we have been working in various directions, various initiatives like railway, water, international and all. So now we are selecting projects where we see that the project is well funded and the working capital cycle is good, and our comfort in terms of the execution. So that is helping us to, and bringing down the BHEL pipe. If we go back 7 years back, the BHEL pie used to be almost like 65 to 70%. And if we go back to 2 years back, the BHEL pie used to be almost 35 to 40%. But now it has come down to 14 to 15%. So that is helping us in a lot to rotate the working capital, and the retention money which we had 250 to 280 plus. Okay. Now, in spite of growth, we are keeping it constant. The reason being, like some of the projects we are negotiating, especially the private customers, that the retention money comes with support of the BG, so that will further help us to support in terms of the working capital.
Got it. So you're expecting this 138 days to also further come down in the next year?
Sir, the idea is to bring it down to at least 135 days first, at least next 12 months. Okay, that's the plan. And with the new initiatives and all the new projects, there is a high probability that should further come down. So we are seeing that gradual improvement, sir.
Got it. Got it. And just in terms of one clarity on the FGD bit, you mentioned that there is a regulatory timeline that needs to be followed. But just to understand this better, are there any requests that can be taken to postpone this, or there is under no situation can there be any postponement to the timelines that are being currently outlined for FGD?
Yeah, I think these deadlines are continuously monitored by the central government and central state authority also. Earlier they had fixed 24 and now they had made it 26. And looking at because it's not only the main ordering is important, but the way it is implemented with the availability of the plant also for the proper shutdown and then availability of some of the access there, because they're all to be retrofitted. Those factors will be taken, and the availability of the equipment also from the where it is sourced, how it is sourced, and all. For all these aspects, and then of course in all these FGD investment is part of the tariff pass-through, and all these things also have to be firmed up with the tariff commitments from the DISCOMs and the LC boards. Therefore, it is a combination of all these factors, but the commitment to implement FGD is very clear, and that is what is seen in the ordering also. A lot of ordering is continuously happening on that.
So it's at least fair to assume that the projects which you have on hand currently, there may be reasonable visibility that they are not being pushed any further, and it will be done by FY25.
Yeah, that is our optimism.
We are seeing that on the ground.
And we are also watching the way the ordering is being done, because ordering is the most important thing for all these projects. And apart from that, we are executing 2 other projects for BHEL also, that is on the civil side. They are also on track. Therefore, we don't anticipate huge delays or any delays on this, because government itself is pushing for this completion. And there is a commitment from the developers also.
Got it. Got it. That is very helpful. Thank you so much, sir, and all the best for the future. Yeah, thank you.
Thank you. The next question is from the line of Sheen George from Geojit Financial Services. Please go ahead.
Hello.
Yes, sir.
Hello.
Yeah, you're audible.
Please.
Good evening, sir. So can you give us the revenue forecast for what is the estimate for 24 and 25, FY24 and FY25?
Yeah. See, 24 are as we discussed, as we also stated, see the conversion 42% is very much likely. So 5,500 crores plus any upside on the FGD that will help us. That's the plan. So for 2025, because the MJ is going to start and we're about to even close the water projects and all. So there could be even some upside in FY25 also. So that should range maybe in the range of around taking MDO together, it should range close to 6,000 plus, sir. Because we have to complete the water projects also.
Fine, understood.
Yeah.
And can you give a
7,000 to 7,500 crores, and 25 we have kept order book target of 8,000 crores, So FY25 order book, we are not taking any conversion percentage. I'm just taking the backlog. So if we
can you come back in on the order book? Your voice was very feeble.
No. See, what I'm trying to say, sir, FY24, we have kept a target of 7,500 crores plus of order booking. And FY25, we have kept a target of 8,000 crores plus order booking. So taking 40% conversion to the opening order book, I'm not taking the addition for that year. So we should be able to cross 6,000 crores plus at 25.
Okay, and what about the order intake estimates as well?
Intake for this year we kept 10,000 crores, so we'll be close to that number. FY24 7,500 crores plus, and FY25 8,000 crores plus.
Fine. Thank you, sir.
Yes, sir.
Thank you. The next question is from the line of Anish Jobalia from Greek Capital. Please go ahead.
Yeah. Hi, sir. Good evening. Sir, you actually gave some number around the cash flow from operations, initial comment. So if you could just, I lost your voice during that time. But if you can give your the number for the 9 months, and what are your targets for the full year as well as for the next year? I mean, given the scenario of the improvement in the the growth in the revenues and margins and also working capital that we are expecting. So if you can share some numbers, that would be great, sir.
Yeah. See, sir, for 9 months, it's close to 45 to 50 crores plus, sir, because that is a number, and this number is expected to go up because whatever is required to mobilize the projects, we have spent the money for all the new orders, including this recent Kajipet and this Bangalore Metro. So whatever mobilization is required, initial mobilization, we have done that. So FY24 year end, it may be in the range of maybe close to 100 crores. That is what our expectation. And 24, the number should go up, maybe close to 180 to 190 crores.
Okay. So, I mean, like, if I see the half year, so in the half year, I think like we did already like 62 crores. So if you have done like 45 crores, it means like there was a negative cash flow from operations in this quarter. Is that correct? And
maybe 10 to 15 crores with the difference. Yes, you're right.
Okay. So, but then we are still expecting to achieve the 100 crores CFO for FY23. That's the target. Is that correct, sir?
That is the target. So the reason being like the new projects like Kajipet and Bangalore Metro, whatever mobilization is required, okay, we have done internally. So the billing starts maybe 30 or 45 thereafter. Normally it takes 30 to 60 days. So what are the projects we have on hand? It's all been spent now. So and quarter 4 normally it's a good quarter for collections, and in terms of execution there is a pressure from there always used to be pressure from the customers during the quarter 4. And if you see in terms of quantum also, quarter 4 will be almost will be the high comparatively quarter 1, quarter 2, and quarter 3. So we are expecting good amount of collections.
Okay, got it, sir. So all the very best for the next quarter and the coming year. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Riken Gopani from Capri Global. Please go ahead.
So just one follow-up question with regards to FGD. So the current order win that we have, that is for about 6,000 megawatts. And the total order book reflects about 6,000 crores. So is it about a crore or so per megawatt that it works out to? Is that works? And in that context, when you said that you are targeting to make about 8,000 megawatt of additional ordering here, then just help me understand why you're building in 1,500 crores in new order win expectations for next year.
No, there are two types of packaging is there. One is if a complete EPC package is there, what we got from Adani is around 73 lakhs per megawatt. And there are contracts which are awarded on a package basis, like civil, mechanical, supply, and then services job. That can vary between 20 to 30 lakhs per megawatt. It is a customer choice. Therefore, and then the orders which are in the pipeline from the CSA Goenka Group is based on that type of philosophy only, not on the EPC. Therefore, it's a combination of EPC, then packaging wise and all. But what I said on a ballpark basis, if I take the 7 to 8,000 megawatts, the opportunity, what we are going to target is around 5 to 6,000 crores. And then based on our past experience and the competitiveness in the market, that is what the figure I told about 1,500 crores.
Okay, but the total remainder of the power capacity which needs to get the FGD retrofitting done, that is about 80,000 megawatt. Is that correct?
It is around 80,000 megawatts. Now, the rest of the private players, like Adani, they have taken advance action. Now, JSPL is there, JSW is there, Vedanta Group is there, and then various other private developers also have to do it. And apart from that, the state utility is also there. For example, Tamil Nadu is coming with a lot of inquiries, and then Maharashtra, then Gujarat state, then the other most of the states they will have some residual orders or the bulk of the order gets put in. Only NTPC has done bulk of the ordering, and then some of the private players. Therefore, all these things they have to complete in the next 1 year because the deadline is 2026. On that basis, these figures will be worked out.
Okay, so you'll still be participating in that 80,000 as well. This is just based on what you have current visibility of. Is that,
but what I'm trying to say, these are all individual packages, individual plants are there. Therefore, about 10% of the available opportunity will participate. That is on a rough, conservative basis. Maybe we will exceed that also. But we are taking based on our present this one, we can do that much easily.
Understood, sir. Understood. That is very helpful, and thank you so much for the answer.
Yeah, thank you, sir.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Yeah, Ramaya here again. Thanks a lot for your presence and all. I think Satish has given the numbers and the marketing and the opportunities available in the project budget of union budget of 10 lakh crores of investment. And there is a 30% increase in the capital investment as a whole by the government. And now private capital will come in a big way in infrastructure, then capital equipment, steel plants, infrastructure projects, mining, minerals, etc. I think the opportunities of 30 to 40,000 crores is not a challenge. And therefore, the targets what has been fixed for 7,500 crores next year and then continue to be maintained that is reasonably possible. And our ordering, the execution cycle also is improving it. It's a better understanding of the business in various projects what we have done. Wherever we entered new business also in non-power, the execution cycles are improving it and projects are getting controlled and with better execution and also cash collection. Therefore, we remain to be optimistic, and the numbers have seen that in terms of the ordering, execution, and then other PAT and EBITDA margins. That is what I would like to say.
Thank you all. Thank you very much.
Thank you very much. On behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.